Ashwini, good morning. Thank you for joining us. Ashwini, every time it has appeared that markets are looking stretched, time to take some chips off the table, whether it's flow, whether it's momentum, it surprises us. How does one deal with this kind of a market? Because if you've stayed invested, you're making maximum gains. If you're making opinions, judge the reality of the market, then you are not participating.
Nikunj, this is a very typical bull market. So bull market, in the midst of it, stops making sense at some point. In your opening market comments, you spoke about what the rail stocks are doing, and that's a clear indication to me that this is a typical bull market. So stock prices in some areas stop making sense. And that's the nature of the beast. So either you continue to participate, stay invested and enjoy the ride, and be prepared that at some point in time the narrative will turn. When and how, it is only with hindsight that we will find out. I think, having said that, what I would also add is that in my 32 years of following the market, this is possibly one of the few times when the macro narrative in India is very, very attractive, and it has never been so attractive, possibly for a brief period in 2007 apart. So obviously, this becomes a huge attraction for macro analysis and for overseas investors. And we live in a market where local investors, have a local bias, home bias, which is there in every market. But we have restrictions on capital flows from outside, investing from outside India into markets outside India. So the combination of that kind of makes it an environment where money is chasing the same ideas, the same stocks. Paper supply has improved of late, but it's still not adequate to absorb all the money that's available. So I think it's a bull market, and you have to just stay invested and enjoy it. And if you don't agree with some of the prices, take some money off the table and don't look at it. I mean, be happy with the fact that you've made money.
Ashwini, how would you analyze, let's say, railways and defense? The big picture, the macro, the government intervention, everything is great. But are markets pricing in FY 27, 26, 28?
Yes, absolutely. I mean, I think, time and again we've seen whether it was infrastructure in 2007, 2003 to 2007 rally, and whether it was power or whether it was coal. At various points in time, we've seen that when you're dealing with significant policy related issues, and when you're dealing with a buyer that is the government ultimately, there tends to be many a slip between the cup and the lip. Now, this time could be different, but those are the most dangerous words in the world of investing. So my thought process here is that I'm not really going to chase this dream. And historically, we found that the further out into the future that you're willing to discount, the more are the chances of disappointment. So obviously, some of these prices have stopped making sense a while ago, and it's a bull market, so who knows where these go? But I would be very, very worried as to what the outlook for these stocks will be at some point.
Okay, so not chasing momentum, not getting that FOMO, but this entire euphoria that we're talking about, Ashwini, is quite visible in the broader markets. The mid caps and the small caps are rallying quite a bit, and has been doing that while rest of the market was even consolidating. Do you think it's getting a bit frothy and toppish?
In areas. So again, if you go back to the previous bull rallies that we've seen, if you go back to 99, 2000, or more accurately between 98 and 2000, it was pharma, media, and IT, right? So those stocks ran away, rest of the market did nothing. If you look at 2003 to 2007, or more particularly 2007, 2008, it was all infrastructure, real estate, and a couple of these SOTP stories that did really well. So, at different phases of the bull market, different sectors catch the fancy and they become super expensive. And there are parts of the market that don't participate. I mean, look at frontline financials, for instance. A lot of the banks, large banks, have done nothing for 3.5 years. And as Nikunj was saying earlier, the environment for the banking sector has never been more constructive, at least in the last 10 or 15 years. So, to imagine that some of the large banks have nothing to offer and defense and railway stocks have everything to offer kind of sounds too extreme to me. So I think the right thing to do at this point in time is to take money off the stocks that have become expensive and look for areas where you have significant downside protection. But I will also add that in the mid and small cap space, because the underperformance over the last decade has been so extreme, there are still stocks which are available at very reasonable valuations with good growth prospects. So it's not that I'm negative on mid and small caps. It's just that I'm increasingly becoming much more selective than maybe 6 months ago.
Uh, Ashwini, where do you think, or how do you think the 2024 election cycle will start impacting the market in terms of opinion, anxiety, curiosity, and more importantly, volatility? What role will that cycle play before?
It's very difficult to answer that question, Nikunj, because we at this point in time don't even know the dates of the central elections or the various state elections. There's a conversation going on that should they all be held together. So let's see, what comes out of that. There were some rumors in the middle of last week, if you recall, that the general elections might happen as early as in December or in February. So we have no visibility. I think the consensus opinion at this point in time is that there is no question about the BJP government not coming back with an absolute majority, maybe not as large a majority as it had the last time, but within a majority nonetheless. I think if that narrative starts to change, there will be some nervousness. But at this point in time, there don't seem to be any signs of that. So I think, from a political noise affecting markets, you definitely have to see significant traction in favor of the India combined, which is not visible today.
Okay. Where have you been shopping off late?
Like I said, financials, some of the larger ones, taking money off
That
the
is
small
2 years
caps and
ago.
putting it to work there with the
Ashwini,
hope that over the next 3 years I
that was
can
2
make
years ago you were shopping. That was the last sale. That was like 2 years ago sale में खरीदा था.
No. I continue to, if you look at the frontline banks, you look at an HDFC Bank or even a Kotak Mahindra Bank or, some of the other names. I mean, they've done nothing for a period of 3 years. Valuations have come off purely due to elapsing of time. And the premium that they enjoyed has contracted significantly. And I think, I think it makes sense to look at names like these. I do have a position in HDFC Bank for due disclosure. But I would say that it makes sense to have a position to build exposure to names like these where you have downside protection and fund it from smaller and mid cap names where the pricing action appears to be extreme. Having said that, I continue to look for ideas in the small and mid cap space because I think the overall economic growth environment in India is going to be very conducive. And if that is the situation, many of these smaller companies will offer you 20-25% earnings growth over the next 5 years, and not all of it is priced in. So I think, it's a combination of both. I do worry about the extreme price action in certain areas and certain sectors, but at the same time, I continue to find opportunities both in the lagging frontline names with good prospects, as well as select small cap industrial names or dare I say, even some of the services names.
Buying banks because they haven't done much, at least over the last many months. Are you buying IT as well with a similar thought process? Of course, some of the names have run up, but what's your take and where does the preference lie within IT?
So, I have been sniffing around at IT for a while. I thought, I'll nibble into it prior to the June quarter earnings results, and looking at the results, I was glad I didn't. So I don't quite understand what's driven the rally. The narrative has not changed. I think the growth environment still remains fairly challenging for the IT services companies. But yeah, maybe the valuations had become cheap enough. And that's the reason why IT is attracting attention. And for most foreign investors who've poured in a huge amount of capital into India over the last couple of months, the large cap IT is an area of extreme familiarity. Valuations are not expensive. There is a very good dividend yield support, so it makes sense for a large institutional inflow to get parked there. So that's what I'm thinking. But I'll still wait for the September results commentary before taking a position there. I think the challenges haven't dissipated quite yet.
Ashwini, you are not alone in that. Even I am as puzzled by the rally as you are, because in terms of the commentary that I heard in the quarter gone by or the earnings, nothing to my mind warrants that kind of move. But you have also been positive, Ashwini, about the textile stocks, right? Could you talk to us about some of the names there, and what's the rationale behind being positive? And is it the entire value unlocking, the real estate vertical kind of stocks that you're looking at within textile?
No, in textiles, it's essentially the export story that's playing out, and it's the China plus one narrative that's playing out. So first, what we saw was that towards the second half of 2022, we were all worried about the US demand slowdown. And it was a little bit of a situation where the retailers in the US had also prepared for a slowdown, and the demand slowdown didn't happen. So as a result, most of the shop shelves were low on inventory at the start of 2023, resulting in a fairly robust environment through the first half of this calendar year. On top of that, you have the China plus one narrative playing out. You also have some FTAs which have been signed, Australia and the UAE in particular, which is offering some opportunity. And I think over the next 3 years, if the access to EU and UK improves, then I think there is a lot more opportunity there. Again, valuations are attractive even now for some of the textile names. I think the risk of a US slowdown is very much there, but it's not visible yet. So, does the US consumer continue to soldier on and we keep worrying about it and nothing happens? It's quite possible. But I find comfort in valuation. So, that's one area where I had invested at the start of the year, and even in 2022. Some of those stocks have done quite well. So, I think I'm grateful for that. But I continue to think there are value buys there which are available.
In a market like India, private banks, well, they were a mega trend 10 years ago, and I'm sure they will be a mega trend 10 years henceforth. But there are a lot of seasonal trends. For example, luxury was bombed out in COVID. Right now, it is the go-to space. Hospitality was bombed out. Now it is the go-to space. Nobody talked about defense. It's the go-to space. Where do you think right now the ingredients of a making where you may see some cyclicality, little bit of mean reversion, and this really could be the next 2-3 year theme?
So I think, chemicals, especially the downstream chemicals, is one area where I think we should keep an eye on. I'm a huge believer in the China plus one narrative, and India does have significant capability in chemicals manufacture. Chemistry is something that we've done well at historically, whether you watch the pharmaceutical space or whether you watch the bulk chemical space. And I think in India now we have the capital and the capability to manage large size projects. So if you put these things together, you might be early in a chemicals cycle. So the stocks have got sold off over the last 1.5 years because there was a massive COVID pop, and the COVID one-off earnings have now been taken away. So earnings have normalized, margins have normalized, but stock prices have also corrected significantly and have not done well. So my sense is that this is one area where you might see a positive surprise. I continue to be quite positive on the pharma space, where I think there are companies in the export oriented space and a few in the domestic market space which are continue to look quite attractive to me. Again, the theme being that the margins have bottomed out, and the China plus one narrative is here to stay. And I think the margins will remain fairly normal from a raw material price point of view, for the next few years, given how soft global economy is. So these are a couple of places where I would be looking for opportunities.
Okay, Ashwini, on that note, we let you go. Appreciate you joining us on the show today. So that's a take coming in from Ashwini Agarwal, looking at financials. That's one space that he likes, and even textiles and some of the other names is something that he's quite positive on. But